Hello traders, my name is Gregor Horat and welcome to a new intraday video for the end of the week in which I will cover the S&P 500 and New Zealand against the Japanese yen. Actually, on the first chart I will take a look on the S&P 500, which is in black, so it's actually US stock market in correlation with other yen crosses. Actually, if S&P 500 will move to the upside, as you know, yen crosses will tend to follow the US stock market, and also if the S&P 500 will decline, you may see a reversal down on those FX pairs as well. So here you can see in in 2016 November, when US stock market turned to the upside, yen crosses also rallied very significantly with a stronger maneuver, but still in the same direction. Then markets were actually consolidating, and there were in a pullback. If you take a look on the S&P 500 in black, in a pullback, just a second, in a pullback from here, okay, this was when in February down to April lows, at the same time when also we have seen a nice pullback on yen crosses. And since then, market, you can see the S&P 500 bounced to the upside and other yen crosses also moved higher. So actually the markets are correlated, and what I think it may happen on the US stock market is that we can see a reversal to the downside into a wave C of a flat correction. I have been talking about this flat correction on in our video and published on the Elliott Wave counts page. So if this will prove correct, then definitely other yen crosses should also continue to the downside, or should follow this price action from the S&P 500. So actually in this type of approach, I want to look for a trade on the downside on the market which is the weakest. Okay, so here in blue, actually, if you take a look at the lowest line, it's actually New Zealand against the Japanese yen. Okay, you can see that it's much lower compared to others. So to me, it tells that if the S&P 500 will move to the downside, New Zealand against the Japanese yen can be very fast back at April lows, okay, which was right here. Okay, so not only that, I have been looking at the New Zealand count against the yen, and it's very clear actually. But before we go to New Zealand, I want to take a look at the S&P 500 just to review, if you just for case if you maybe missed this video published on the Elliott Wave counts page. So actually, I'm looking at a potential flat correction, or maybe even a triangle in progress in a wave 4. In either case, I think that there can be some downside coming to fill this gap from April 21st. Those gaps will very rarely stay open, and normally when they are filled, market will reverse. So either we will see then a triangle, or maybe even lower levels for a wave C to test this level and then turn to the upside. So actually, I think that we could see that resistance here that will hold prices lower for the S&P 500, which means that New Zealand against the yen could also stay bearish. So if we go to the New Zealand against the yen now, firstly, here is a weekly technical chart. Clearly, we have seen a nice decline over the past few months or weeks, and also I really like this recent candlestick formation. Okay, we have seen a nice bounce here and then a reversal back to the downside. It's Friday, and it looks like that we will close bearish, which means this candlestick will definitely suggest more weakness in a week ahead. So on the 4-hour chart, I reviewed the wave counts, and it's pretty clear here. We have waves 1, 2, then you have an extended wave 3 to the downside, and then you have some overlapping price action, which can be counted as an ABC, okay, movement A, B, and then a 5-wave rally for a wave C, which is visible on the lower time frame chart. Actually, here's the 1-hour chart. You can see here 5 waves up for a wave C. That's why I labeled my primary count as an ABC move. But there's also chance that you can count here recovery as a double zigzag. So in either case, it's a corrective movement. We have seen a reversal from the second resistance area, and so far we can see a nice reversal lower. If we take a look on the hourly chart, we are already breaking this trend line quite nicely. So next week pullbacks could be interesting, back to this trend line and then a new leg to the downside, especially, as I said, if S&P 500 will also turn down, and dollar yen as well, which should follow the same steps. So once again, this candlestick, this pattern on the intraday chart and on the 4-hour chart suggests that we can see more weakness ahead. Okay, so traders, that's it. This will be market that I will track very closely early next week. Also, one more thing that I see right now is invalidation level. It's very important at 80.62. As long as this level will hold, you know that this wave count remains valid, because wave 4 must not trade into territory of a wave 1. Okay, traders, thank you very much for your attention, and I will catch you with more charts next week. Have a good weekend.